Potential home buyers getting a little relief on rates this week. The 30-year fixed dropping almost 0.2%. But lack of inventory, it's still a massive concern. Sales of pre-owned homes, that fell nearly 19% in June from a year ago as higher rates keep current homeowners where they are. For more analysis, we want to bring in Orphe Divounguy, Zillow, a senior economist. Orphe, it's good to see you here. So just take a step back for us and give us your assessment of the housing market right now, the dynamics that are currently at play. We have the 30-year fixed rate still not that far from 7%. The Fed has remained, it says that it will stay aggressive in its fight against inflation. And there isn't a lot of supply out there on the market. So what does that mean for housing come the fall and winter?
Yeah, totally. I mean, to some extent, sales are expected to slow. They peak in June and July and expected to slow for the remainder of the year. Because people tend to move in the spring. But this spring, we didn't have enough homes on the market, and shoppers can't buy what's not on the shelf. And that's because existing homeowners don't want to trade their low mortgage rate for today's higher rates. Our Zillow research shows that 90% of homeowners have a mortgage rate below 6%. And so it makes sense that new listings are down 28% compared to last year, and that total inventory is still half of what it was before the pandemic.
And Orphe, the Fed is expected to hike rates next week. How likely is it after that rate hike that we could see mortgage rates top 7%? And how much worse would that be for those existing home sales?
Look, the good news on the inflation front is that, inflation has come down substantially since the 9% peak roughly a year ago. And so that is going to put, ease pressure on mortgage rates and bring them a little bit lower. But at the same time, right, the fact that recession risk is receding means that, demand for safe assets isn't soaring. And so that, is going to put a floor on how low mortgage rates can get going forward. So I don't expect mortgage rates to increase as a result of the Fed raising rates. I just think that, the current economic environment and conditions basically means that mortgage rates will just not return to the low level that we saw during the pandemic peak.
So, Orphe, I guess I'm going to press you a little bit here. How low then do you think rates are going to go? Are we talking a drop back to about that 6% level?
No, I think, it's really going to depend on inflation going forward, right? We're seeing data coming in that, retail sales came in lower than expected, but core retail sales were pretty hot. So is inflation going to continue to tick down? Can the Fed get core inflation under control and back towards the 2% target? I think that's really going to be critical for where mortgage rates end up going forward.
And selfishly for myself, Orphe, what does that mean for the first-time home buyer? We saw that group have the lowest share of June existing home sales in history.
Totally. I mean, for buyers, it just means that, there's still stiff competition in the most affordable markets and for the most affordable homes. We're seeing units flying off the shelves, right, in the Midwest, in areas that are still very, very affordable relative to the rest of the country. And at Zillow, we're trying to make the process really easy for buyers. One of the tools we have is our Zillow total monthly cost calculator, where a buyer can actually just put in what it is that they can afford or what they want to pay on a monthly basis. And we basically show them all of the inventory that will fit within their budget. I tell buyers in this environment, two professionals you need to reach out to. You need to have a mortgage professional on your side who's going to help you improve your credit, but also figure out what it is that you can afford. And you need to work with an agent because an agent's going to help kind of figure out what are the units out there that will fit within your budget. So that's my advice for buyers today. You don't look at the mortgage rate necessarily. Of course, it's important, but you don't necessarily think about whether or not mortgage rates are going to come down because, it's impossible to time the mortgage rate drop or to figure out where mortgage rates are headed. Now, there's also good news for buyers out there is that despite the lack of inventory, the lack of existing homes coming on the market, builders are kind of picking up some of the slack. We're seeing builder sentiment increase since January. We're seeing housing starts increase again. And builders still had a lot of inventory, a lot of units under construction that are now making their way on the market. So, while existing home sales have fallen, you're seeing kind of this buildup of inventory coming from the new construction site. and that's very helpful for buyers and renters in the long run. Also, builders have offered all kinds of incentives. They're trying to make the math work for buyers. They're offering 2-to-1 rate buy downs. They're offering to pay some of the closing costs. And again, that's good news for buyers in today's challenging environment.
Orphe, do you think home builders are still going to be offering those types of incentives given the fact that they are at such an advantage at this point in the housing cycle?
Yeah, I think the incentives are going to stay because ultimately the math has to add up. You have the largest generation, you have millennials going into this housing market wanting to buy a home. And ultimately, if the math doesn't add up, they sit on the sideline and wait. And so builders have an advantage right now where they can build. They know what their costs are going to be. They know how much they can afford to give to buyers. And, you know, for example, a 2-to-1 rate buy down right now is a very lucrative feature right now that's helping drive traffic to new construction, you know, because builders are basically getting buyers where they would have been, you know, a year ago in terms of mortgage rates and making it work for buyers. You know, buyers can save thousands over the first few years of home ownership by taking advantage of that.
And Orphe, we always hear cash is king when it comes to real estate. Are you seeing a lot of cash deals right now? And does that come with some negotiating power there as well?
Yeah, I think, you know, I think I saw a stat saying something like 28% of home sales are cash, and cash is definitely on the rise because basically buyers that are not necessarily sensitive to interest rates are going to be more active in an environment where mortgage rates are so high, right? So yes, cash is definitely making somewhat of a comeback. It's high in terms of as a share of total sales in today's environment. But I think for first-time home buyers, at least, you know, we at Zillow are focused on making home a reality for more people, and that means, you know, making the process less complex. You know, of offering tools to buyers, to potential home buyers. You know, I mentioned the monthly cost calculator for home buyers, but we also have things like for renters, options for renters. So, for example, you probably heard about the White House talking about junk fees. You know, a renter today has having to submit multiple applications just to get one unit, and those applications come with fees, and so they're paying multiple fees in order to get just one unit. And those fees have historically disproportionately harmed low-income families and minorities. And so at Zillow, we want to make those fees explicit, and we want to make sure buyers know what those fees are. But at the same time, we now have unveiled a new tool where basically buyers can just submit one application fee and apply to as many units as they want in order to save them on those costs.
Some welcome news there for potential buyers because it certainly is a very, very tough market out there for them. Orphe Divounguy of Zillow, thanks so much for joining us.